Scott Bauer at Trading Advantage joins me now for Stocking Up. Hello to you, Scott.
Good morning. How are you, Ann?
I'm doing well. Scott's here to talk about a biotech. It is Biogen. Now, I always like to say these are steel stomach stocks because you cannot be a worried person and trade these things or invest in these stocks.
That's correct.
Sometimes they work out well, sometimes they don't. That's just the name of the game.
Right. And you know, especially in a stock like this, you're talking about a $300 plus stock. It's a whopper. But you know, I've been watching the paper here, and last week there was a lot of activity going out to September. There was a lot of activity up at the 330 and 340 strikes. So we're about 315, 318 right now. And what I really like is there's been incredible momentum, right? I mean, the whole sector has had pretty good momentum.
This is true.
Biogen has had incredible momentum here. The option market is suggesting about a $20 move from where we are right now going out to September expiration. You know, that can be either up or down. But what I like, and especially based on some of the paper that I've seen, is the upside here. There's a 330, 340 call spread, September options, that's trading for around $2. So when you talked about just now about, you have to have a stomach for this, you have to go into these things and know your risk. Well, this is a $10 wide call spread that I'm going to buy for $2. So I know what my risk is.
Well,
right?
The options make it less expensive than just going in and buying the stock outright.
Absolutely. And the reason I like this call spread is, first off, there's a lot of upside paper here. So, whether that's just a continuation of the overall biotech market or, maybe something, relative in Biogen. But this call spread, the 330, 340 call spread, also fits within the parameters of what the option market is expecting in the move. So if that move is to the upside, that puts the stock at 335 to 340 or so by September expiration. So I'm going to pay $2 for this thing, and that is my risk. If the stock goes to zero, I lose, $2 per spread that I do this.
It was not that long ago that the biotechs were freaking out because of comments made by presidential candidate Hillary Clinton.
Yes.
Is that out of the market now? Because these stocks are going higher.
Yeah, I think it really is. I mean, there was such an overreaction, which you typically see anytime that there's news in, especially not just about a particular stock, but an overall sector, that there's news. There's first reaction is panic. That's settled down now. It's been, 3-4 months, maybe even longer than that since she made those comments.
Other than me just mentioning
it. and the stocks are trading more back to their own fundamentals and their own technicals now.
So back to normal.
Exactly.
So I want to ask you too about stem cell. This is a stock that we saw rocket 600% higher. I mean, for people who were in that stock, boy, were they rejoicing. But then it pulled back about 30%. So at this level, would you even try to think?
I'm not doing anything in there. Same thing what we just talked about. You always see this initial overreaction, whether it's downside, upside. Who really knows? To me, that's a stock still that can go back up that 50% or could drop down 50% just at something in the news like that.
Okay.
So
good to have you in the show. Thank you.
Always a pleasure.